Today, the Federal Reserve announcing plans to reduce its economic stimulus. What does it mean for you and the market? And mixed messages from Democrats. As they talk about raising taxes on the rich, some are considering a potentially massive tax cut. And Amazon says soon we won't have to tell Alexa what we want it to do. It'll know by itself. That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. The Federal Reserve has announced a plan to begin tapering down its bond buying program. The central bank has been supporting the economy through the pandemic by buying billions of dollars worth of government bonds and other financial assets every month. The policy is good for financial assets, but many say it's contributing to inflation and income inequality. So now the Fed is reducing its purchases.
Beginning later this month, we will reduce the monthly pace of our net asset purchases by $10 billion for Treasury securities and $5 billion for agency mortgage-backed securities. We also announced another reduction of this size in the monthly purchase pace starting in mid-December.
It's the first time since the start of the pandemic the Fed has eased off its aggressive economic stimulus. None of this means economic stimulus is going away quickly or all at once. The target interest rates will remain near zero for the time being. Also, the Fed will still buy at least $70 billion in Treasury securities and at least $35 billion in mortgage-backed securities this month. Those purchases will go down to at least $60 billion and $30 billion respectively starting in December. So joining us with instant reaction on the Federal Reserve's decision is Lance Roberts, Chief Strategist at RIA Advisors. Roberts helps manage over $1 billion in assets with RIA. Lance, pleasure to see you as always. Thanks for taking the time out of your busy day. No real surprise from Jerome Powell's announcement today. They're going to taper, but no real reaction in the stock market or the bond market just yet. You think this is going to be a smooth landing for them?
Well, every time that we go one way or the other with Fed rate hikes, and all we have to do is go back and look at history, it's always the assumption is like, okay, well, this time it's going to be a smooth landing, but it never really is. And again, the markets did, when the Fed came out and made their announcement, the S&P was trading a little bit in negative territory. It's now rallied here about 0.5% heading towards the close. So again, and this was really just a function that the Fed didn't, really surprise anyone, and not that they should have. The Fed's been telegraphing now for the last couple of months that they were going to announce the taper in November, and that taper would start pretty immediately, and that they would not be hiking rates anytime soon. And that's exactly what they said. If you read their Fed statement, they actually laid out the schedule. They said that in November, they're going to reduce treasuries by $10 billion and mortgage-backed securities by $5 billion a month. So that'll take QE down from $120 billion a month to $105. December, they'll do the same thing. January, February, March, April, May, and June. So if you do $15 billion a month, in June, you'll have reduced the balance sheet expansion. Now, this is the important point here, Paul. We're talking about a balance sheet expansion, so we will no longer be adding to the balance sheet in June because the QE will be at zero. However, the Fed will still be buying billions of dollars of bonds every month to replace the ones that are rolling off. So in other words, to keep their balance sheet stable, it's not going to increase or reduce. It's going to remain flat, and that's really what to expect here. Now, rate hikes will be occurring starting in July, and currently expected that we'll have 3 to 4 rate hikes in 2022.
So given the relatively long timeline we're talking about, do you feel investors like yourselves and other investors, they're able to price in this activity from the Federal Reserve so it kind of, in a sense, it will smooth it out? Or are you expecting perhaps some bumps along the way?
Well, initially, and this is the reason you saw the markets kind of react positively today to the Fed's announcement, is that, look, they're only reducing QE by $15 billion a month. They're still doing $105 billion a month. That's a lot of liquidity coming into the markets. And so that's why, stocks reacted positively. So again, there was no surprise. They didn't come out and say, hey, because we're having 5.4% inflation, we're going to have to hike rates sooner than later. They didn't say that. They stayed away from that entirety altogether. And so stocks like that. Now, however, over the next few months, and history bears this out if we go back and look, the two things that are going to happen in the markets is that, one, volatility will pick up as the Federal Reserve continues their tapering. And when they begin to start talking about hiking interest rates, that tends to weigh on stocks a little bit more. Bonds, however, tend to react very positively. Now, we're talking about longer duration bonds, longer duration treasuries, the yields on the 10-year and the 30-year bonds. Those tend to actually fall as the Fed begins to taper. And this is because there's a risk-off transition in investor mentality. We go from risk-on, buying equities, to risk-off, buying bonds for safety. So that would really be the setup going to next year. Higher volatility, risk-off into safety-type positions next year, lower rates of return, and lower economic growth and lower rates of earnings growth into 2022.
Very good. Lance Roberts, RIA Advisors. Appreciate it. Thank you.
My pleasure. Thank you.
With inflation comes demands and strikes for more pay. Today, workers at John Deere are rejecting a contract offer that would have given them a 10% raise. Now they're staying on strike and holding out for a better deal. The offer was twice as big as the last one rejected in November. Deere officials say they're disappointed the agreement was voted down. They say it would have given enhanced wages and benefits that were already the best in the industry. One worker told an Iowa paper he voted it down because he didn't think it provided enough for the majority of workers on the lower end of the pay scale. Tuesday's vote means that Deere's first major strike since 1986 will continue. And Democrats are considering repealing the SALT cap that was imposed by the Trump administration. It could potentially give a massive tax cut to America's wealthy, something that seems at odds with their stated goal of increasing taxes on the rich. NTD's Faye Quarter speaks with policy experts.
Some Democrats want to repeal the SALT cap, which would greatly benefit wealthy Americans in highly taxed blue states. SALT stands for state and local tax. The SALT deduction lets taxpayers deduct taxes paid to state and local governments from their federal taxes. The Trump administration had capped the deduction at $10,000.
I'm a little bit confused as anybody else is. You've heard the rhetoric from the progressive left on how they want to raise taxes on the millionaires and billionaires.
Jonathan Williams is the chief economist at the American Legislative Exchange Council. He says states with low taxes will be hurt if the SALT cap is repealed.
Turns out it's really much easier if you can take your costs of being a high tax state and have federal taxpayers pick up the tab for you instead of controlling your spending.
Garrett Watson is a senior policy analyst at the Tax Foundation. He says people who earn over $1 million a year will get the most benefits.
We find at the Tax Foundation that about 60% of the benefit of removing the SALT cap comes to the top 1%, and 90% of the benefit goes to the top 5%. So it is quite regressive to do this.
Democrats want to repeal the cap for 5 years, including one retroactive year. Meanwhile, Bernie Sanders tweeted, "The top 1% would pay lower taxes after passage of the Build Back Better plan than they did after the Trump tax cut in 2017. This is beyond unacceptable." Faye Quarter, NTD News.
We'll keep you updated. And the services industry is growing fast as declining virus cases boost demand. But businesses are still struggling with supply chain problems and the resulting exorbitant prices. The ISM said its services sector index jumped to 66.7 last month. That's the highest since the series started in 1997. A reading above 50 indicates growth in the services sector, and it accounts for almost 2/3 of U.S. economic activity. But businesses are waiting longer for supplier deliveries. The index jumped to 75.6. Any reading above 50 means slower deliveries. They're also paying higher prices. That index soared to 82.9. Another report today shows private employment increased by over 500,000 jobs last month, beating estimates. Businesses in leisure and hospitality industry adding 185,000 jobs, manufacturing adding 50,000 jobs, and construction hiring rose by 50,000 too. So joining us with insight into America's services sector is Richard Boussier. He's the manager director of the Langham Hotel on 5th Avenue, New York City. Richard, great to see you. Thanks so much for coming on. New York, of course, particularly New York hospitality, one of the hardest hit last year when everything got locked down. How's business been recently?
Well, I'm very pleased to say that our Q3 and Q4 occupancy levels are showing significant improvement over earlier in the pandemic. And, you know, we fully expect to show significant growth, not up to 2019 levels, but much, much better than we were at the beginning of the year.
Wow, great to hear. Are we seeing business travelers come back at all, or is it mostly leisure?
Well, what we've seen is there's been a huge shift towards the leisure market. And of course, everything is domestic at the moment, which is working out quite good for us. We've seen significant increase in demand from luxury leisure travelers, particularly from American Express fine hotels and resorts, actually back to 2019 levels.
Wow, incredible. Great to hear. We see the Biden administration are planning to lift restrictions on international travelers at some point in this month, or are you expecting a boost to your business when that happens?
Yes, I mean, that's the most exciting news that we've had in a while, that as of November 8th, you know, the European borders are going to be open, and we anticipate that there will be significant pent-up demand from places like UK and other places in Europe, and that we will start to see an influx of foreign travelers coming into New York City.
Are you confident about New York City's future?
Absolutely. New York is New York. It will always be New York. The character is the same. We're learning and growing from the past 18 months. And now with the opening of European borders, we're really looking forward to seeing that mix of business grow, including more European travelers. And we're very bullish moving forward into 2022.
Great to hear. Richard Boussier, Managing Director, Langham Hotel on Fifth Avenue, New York City. Thank you.
You're very welcome. My pleasure.
And about 59,000 containers at ports in California are racking up penalties because they're sticking around too long. The Port of LA says there are 84,000 containers waiting to be moved. Among them, 40,000 have been sitting there for over 9 days. That's the threshold for the fine. About another 19,000 containers are being charged fees at the Port of Long Beach. Last week, the port approved a new plan to fine shipping companies whose containers linger for too long. Now for the latest on the supply chain crisis is Sal Mercogliano of Campbell University. Sal, great to see you as always. We see these containers piling up on Long Beach and accruing fines. You think this helps, and what are really the incentives for solving this problem? Because it appears to me recently that some companies are actually finding this crisis relatively profitable.
Well, we're seeing the third quarter reports coming in right now in all the major carriers, and they're reporting record profits. So for the shipping carriers, this is a gold mine. They're making lots of money right now. And the ports of LA and Long Beach have implemented what I kind of refer to as hyper demurrage. They're putting this fine on containers that are sitting too long in their port. The goal here is to motivate them to move the containers off the port. The problem is the fine's being leveled against the ocean carriers and not really the shippers who need the containers in their warehouses, in their distribution sites. So they may be a bit displaced in where they're allocating their fines.
So can you break that down for us laymen, the difference between a carrier and a shipper? Who will eventually get billed for this?
Sure. So the carriers are those big ocean carriers we just talked about, the Mediterranean shipping companies, Hapag, Maersk, whereas the shipper would be everything from your local store to Walmart, Amazon, Target. And a lot of the carriers have within their shipping agreements provisions that allow you to pass tariffs and fines onto them. Now, not everybody does. A lot of the experienced shippers would have provisions in there that you can't retrograde fines in there. But for smaller carriers in particular, or small shippers, I should say, they may not have that in there. And so this fine can accumulate very large, very quickly, unfortunately.
On the carriers, we saw Maersk yesterday, as you mentioned, record profits for the quarter. We saw a Japanese carrier, I believe today or yesterday, ONE, again reporting record profits. I believe that last time we spoke, these big ocean carriers, if I'm not mistaken. They control a lot of the international infrastructure, the shipping lines, if I'm not mistaken. Do they have an incentive for actually solving it? Are they able to, or who should we be looking to actually try and fix this?
Well, that's an interesting question, because these profits really would indicate a disincentive to change anything the way it is. They had been really in struggling, breaking even prior to 2020, prior to 2019, actually. They were not in really good, sound economic situations. Now, making record profits, their ships are making money sitting at anchor off the ports of LA and Long Beach. So there's not a lot of disincentives. And that's one of the reasons LA and Long Beach applied these fines. The question is, these fines are going to get passed right to the shipper, not so much to the carrier. So it's not clear that this is going to alleviate the issue. One of the big problems is the accumulation of empty containers in the terminal, and really the need to swing them back over to Asia. And again, this fine is being allocated to loaded containers importing, not to containers that are being exported.
Finally, I believe the United States, the federal government, is extending loans to Long Beach and ports in California. You think this will help alleviate the problem, or?
I have a very mixed feeling about this, because I feel like LA and Long Beach right now represents 35 to 40% of all the containers coming in. And obviously you have infrastructure issues, road issues, rail issues. There are things that can be done to improve the port, but we also have to think long term. We have to think about a national strategy. Do we want 35, 40% of all our imports coming in through one port? Should we be like Singapore, for example, that's developing a brand new port? Singapore has a real estate's a premium on an island nation, yet they're creating a whole separate brand new terminal. And maybe we need to be thinking about long term, where can we put our money for the best bang down the road?
Sal Mercogliano, Campbell University. And the most popular real estate website in America, Zillow, is shutting down its business that buys and flips homes. And it's eliminating a large chunk of its workforce to boot. NTD's Phil Zoe has the story.
Zillow, which gets over 30 million unique visitors each month, by far the biggest real estate website, is shutting down its home buying program called Zillow Offers.
I did not expect them to completely close down the business.
Zillow had a disappointing third quarter report, missing estimates and losing over $400 million in the homes segment.
I thought was crazy, and especially now the market is so high, unnaturally high. So just to get in at the levels they did, I thought was a recipe for disaster.
The company is also laying off 25% of its workforce, which is over 1,500 employees.
Real estate home prices cannot just continuously go up quarter in and quarter out. Even though we have had extremely robust home price appreciation earlier this year, that was always going to be a challenge for the business model.
Alarm bells went off for Nevada real estate agent Sean Gotcher months ago. He knew something was wrong.
If a company had enough money and they focused and localized on a particular area, particular zip code, a particular neighborhood, they might have the power to actually manipulate that entire market.
He made a TikTok video that went viral, tripling his followers to over 100,000.
Our neighborhoods, our homes, were the test to see how this billion-dollar company can finally become profitable.
Now Zillow is looking to sell a portfolio of around 7,000 homes for around $3 billion, and some of them for below the purchase price. Zillow's CEO told CNBC this isn't a fire sale, but they're winding down the inventory. Phil Zoe, NTD News.
And stocks gained today, with major indexes hitting more record highs, even as the Federal Reserve announced its tapering plan. The Dow rose 105 points, about 0.3%. S&P 500 gained 30 points, about 0.7%. And the Nasdaq gained 162 points, about 1% today. And Amazon says we should speak less to Alexa. It's not that its voice recognition quarter explains.
The senior vice president of Alexa said at the Web Summit Tuesday that Amazon wants you to talk less to Alexa.
Amazon's Tom Taylor.
Tech giants are continuously improving their AI assistants, and the goal is for them to understand and anticipate what humans want and when.
We believe that the future of consumer technology is ambient intelligence, which uses AI to weave together devices and intelligent services
Taylor said that today there are more than 130,000 Alexa skills, and the device will be able to take actions on your behalf. Some consider ambient intelligence the next step for artificial intelligence. It brings together sensors and devices that are embedded in our environment with AI. This way, the environment becomes intelligent and context-aware. Experts in the industry predict that AI democratization, or self-service AI, is becoming increasingly important.
In parallel to the rise of this self-service AI, which customers directly tailor the AI to their needs, we're at the beginning of a second big trend. AI becoming less reactive to customer requests and more proactive on its own.
Alexa will be able to more actively learn from customers' feedback signals. For example, when customers repeat their requests because of an error in interpretation. Amazon expects many different AI assistants in the future for different roles in different contexts. Faye Quarter, NTD News.
Still to come this evening. Starbucks is releasing its new holiday cups for 2021. Stick around for details on its all-new seasonal beverage, too. And a baby show in London showcases the latest trends for parents and babies. What are the major themes this year? That and more coming up on NTD Business.
Secure, the true solution for your digital privacy and security. Secure is a private and secure messaging and email solution hosted in Switzerland, using military-grade encryption and Swiss privacy laws, giving you true privacy. Secure is 100% private and does not collect or sell any of your personal data. Secure's Helix technology connects you securely to our Swiss servers without the need of a VPN, guaranteeing privacy and security for all your communications. Secure Messenger doesn't require your phone number or any personal data that hackers target. Chat by Invites allows you to chat privately and securely with anyone outside of your secure network without the need for others to download Secure. Secure Send offers you a private and secure way to email anyone outside of Secure. You won't find this level of privacy or security on any other email or instant messaging application. Visit secure.com. Regain and protect your privacy today.
Shall we begin?
People are starving, sir. They're unable to buy a simple loaf of bread. Can you make any exception to the mark 666?
None. If you don't get the mark, you don't eat. It's that simple. My goal has never changed. People will bow down to me, or they will die.
Welcome back. The CEO of Butterball says Thanksgiving turkeys will likely be more expensive this year. He told Fox News smaller ones will also be hard to find. It's because inflation remains stubbornly high and supply chains are still struggling. The CEO said he doesn't expect overall turkey shortages, but expects fewer smaller ones. He suggests buying your Thanksgiving turkey as early as you can. With the holiday season approaching, it means it's time to make that cup of joe more festive. Starbucks has released the 4 designs for this year's holiday cups. They're molded after themes of wrapping paper, ribbons on a gift box, holiday lights, and a candy cane. Of course, it's not just cups. Holiday-themed drinks are also back. New this year, the iced sugar cookie almond milk latte, which Starbucks' first holiday beverage made with non-dairy milk. It's also served over ice in response to growing popularity of cold coffee drinks. The new cups will start hitting Starbucks locations Thursday. When it comes to parenting, health, fitness, and sustainability are the major trends this year. They're all on show at London's Baby Show. NTD's Andrew Thomas takes a look.
Here at the Baby Show in London, they're featuring the latest gadgets, products, and trends for the newborns of 2021, including the new Zeno range stroller, designed to keep parents fit, allowing them to run, bike, and soon even cross-country ski with it too.
So we haven't actually launched sports until this year, which we're super excited for us for having a new category. And actually we've noticed the amount of people going out with running, and it almost fell at the perfect timing.
Sustainability is also a major trend. Many fabrics and clothing on show are made from recycled or organic materials. Cura Organics specializes in car seat blankets made from organic cotton.
Especially when it comes to baby products, they want to ensure everything that is against the baby's skin is safe and free from any nasty chemicals.
With babies outgrowing their clothes quickly, dressing them can raise some environmental concerns. With this in mind, Eve Keke set up Bundly, a baby clothing rental service.
Babies grow so fast and they're just constantly outgrowing their clothes. They actually outgrow 7 clothing sizes in their first 2 years, which is why I started Bundly. I wanted to give parents a more sustainable way to dress their baby that was also super convenient.
Fitness clothing for pregnant moms is also prevalent at the event. So are many healthy and organic food options. The show manager says since the pandemic hit, people are focusing more on health, well-being, and sustainability. Andrew Thomas, NTD News.
That's the latest business updates for today, but you can still catch NTD Evening News with Stephanie Cox. That's at 6:30 p.m. Eastern. For NTD Business, it's all for today. Thank you for watching. We'll see you tomorrow.